Welcome to the UK's first ever conference dedicated to impact investment funds. So thanks all very much for being here. I know you've all travelled far and wide to be here today, and we're delighted to host you in this magnificent venue, even though the sun's shining outside and we can't see it. But so as you can see, we've got a jam-packed lineup of excellent speakers for you today, all of whom come from a diverse range of organisations from all across Europe. The organisations they represent cover all shapes and sizes, but they all have one thing in common, and that is tackling social and environmental issues through either managing or investing in impact funds and products. On your seats, or just below your seats, you'll find our conference brochure, which gives you the running order, the speakers' bios, summaries of the 4 funds, which are going to be presenting later on today, and also some notes in the some space in the back that you guys can take some notes on, so pens at the ready. We're going to be starting with our keynote speaker, Chris, which will be followed by our panel discussion with 4 outstanding leaders from the impact investment space. And then we're going to be taking a short break for some more coffee and a chat before diving straight back into the impact fund presentation session. Our CEO, Rod, and timekeeper for the day is going to be wrapping things up. And we'll look to finish promptly at 5:45, followed by a drinks and networking session at the end. So, unsurprisingly, given the caliber of speakers on offer, we've actually been 2.5 times oversubscribed for the conference, which is obviously fantastic. And we promise to anyone who wasn't able to make it today that we're going to be hosting next year's event in a much larger venue. So, just a couple of housekeeping points before we start. We are recording this conference, so please switch your phones onto silent. And for any questions for our panelists, then please do use the roaming microphones so we can hear you clearly. So let's get started. For those of you who don't know me, I'm Humphreys. I head up our fund advisory and capital raising business here at ClearlySo. I joined the company just over 3 years ago, and from a background in renewable energy and fund advisory. In my first 2 weeks at ClearlySo, I remember attending 3 conferences and 2 roundtables, all of which had identical attendee lists. I could immediately see that whilst impact investment was getting plenty of hype and attention in the market, not much was going to change if we were all preaching to the choir. We soon realised that if we were going to shift gears and get mainstream investors engaged in investing in impact, we needed tangible financial products of a significant enough size, market rate returns, and run by high quality fund managers. So obviously I wasn't asking for much at that time. We had a starting point. As ClearlySo, we'd already built out a comprehensive list of institutional investors, as we've been raising money for businesses since 2012. So getting in front of investors has never really been our problem. But what we didn't have were tangible live investment opportunities that most institutional investors could actually invest in, namely impact funds and products. So shortly after I joined in 2016, we decided to set up our fund advisory and capital raising business, offering services to the swelling ranks of fund managers and investors who were looking to get involved in the impact space. We had a broad range of skills already internally at ClearlySo, including my own, but most importantly, we had the insight of what investors really wanted when it came to making investments. Fund managers started to approach us. They were asking us how we could help them set up vehicles, develop their investment strategies, source portfolio companies for them, given our work in the capital raising side, design impact measurement frameworks, but most importantly was to help them raise capital. This was the key pinch point. And over the last 2 years, we've now met with over 120 fund managers and work with 16 impact funds, helping them bring those products to market. Now, I promise to keep the shameless self-promotion down to a minimum today, because today is really about hearing from a range of fund managers and impact investors as to why they have taken the plunge into impact investing. We're going to ask them what they really think is driving this growth in the sector, and what they think we need to do to meet the needs of mainstream investors to get them investing in this space. But I want to share a few observations before I hand over to our speakers from first-hand observations we've had over the last couple of years when we've been developing this business. So there are the usual sound bites about impact investing. So the astronomical growth of assets under management in the space, so now at 114 billion. The huge shift of wealth to Generation X, estimated to be 30 trillion over the next 4 decades, and obviously the prevalence of millennials to care much more about social and environmental causes, 85% of us apparently. All of which may well be true, but clearly so, we've always felt that there's been something missing from the narrative. And that is actually what is happening on the ground on a fund-by-fund level. What products are out there which investors can put their money into? When we started on this journey, we found that there was a substantial mismatch between impact funds and products available and the willingness and ability of investors to dip their toe into the water. Thankfully, over the last 2 years, we have started to see this gap close. This has really been driven by 2 notable developments, the first being the shift in attitudes of institutional investors, and the second being the choice and number of impact funds and products which are available on the market, as well as some significant high-caliber fund managers now active in the space. So let's just start with demand from investors. Since we started building out our institutional investor network in 2010, we've seen a pretty steady growth of the number of investors interested in impact. Whilst many of these investors are still thinking about it rather than actively investing, we can see a sharp number, particularly in terms of the growth from 2016 to 2018. This has largely been led by this orange section here, which is family offices. We've seen a huge appetite from them in the recent years, and also private equity and venture capital funds who are coming to market and looking at setting their own impact product, which is in the green just up there. Institutional investors, as I'm sure you're aware, are becoming increasingly under pressure to include impact in their investment considerations. Although anecdotal, we've seen a dramatic shift in the dialogue that we've been having with institutional investors every time we sit down with them on an ongoing basis. A few years ago, common reservations were along the lines of, why should we invest in impact investing? How much return do I need to give up? When X and Y start doing something, we'll think about it. And of course, my favorite would be in touch. Whilst I regularly still find myself trying to counter these reservations, the typical responses we're now getting are actually more along the lines with, we're actually developing our own impact strategy. What have you got in the pipeline that we can invest in? And I heard X is doing Y, so how can I get ahead of the game? I can't emphasize this point enough, this shift that we've seen in these investor meetings, which we have on an almost weekly basis. And finally, what we're seeing after all of these years of hype is that more and more institutional investors are putting money into funds. We also specifically track LP investors, which are obviously the most relevant for this asset class. And over the last 3 years, particularly across Europe, you can see that we've swelled our LP investor networks to over 300 LPs, which are currently actively looking at impact products. Over 130 of these LPs were unearthed in 2018 alone. And the reason we've been able to unearth them is having products to actually bring to them that they can consider due diligence and invest on. This leads me on to my second key driver, which is the sheer number and diversity of impact funds coming to market and successfully raising capital. Breaking this down by asset class, you can see that the market historically and today is naturally dominated by private equity capital, and this is due to the nature of the underlying investments. But there are an increasing number of private debt, property and infrastructure funds, and fund of funds, which are all now available to institutional investors. And along with innovative products that we're seeing come to market on the public equity side, this spread of impact investment across asset classes is helping to try and tackle one of those key issues for mainstream investors, illiquidity, which we'll come on to later as well. The impact funds on offer also provide a very diverse range of return profiles, from capital preservation, so an OICO credit, medical credit funds, all the way to attractive market rate returns and above, so Palatine, AXA IM, Aristata, Bamboo, all of who you're going to be hearing from later today. Many of the more established fund managers have opted for a generalist impact investment strategy, but there are a plethora of other focused and thematic funds, many of which bring a unique set of expertise to try and tackle specific social and environmental issues. I've highlighted 4 key areas here that we've seen huge growth in, but we could easily replicate this for 9, 10, 12 sectors. We've also seen a huge increase in the size of impact funds and products coming to market over the last few years. Ticket size remains an issue for the larger institutional investors who want to put money into impact, as historically impact funds have really been sub $100 million. But over the last few years, we have again seen this change. The average size of funds we saw in 2015 coming through to market was around $32 million. And only 3 years later, that's increased to over $55 million. Whilst, yes, we have some much larger funds coming in at the top end on the TPGs and Partners Group, etc., which are bringing in different types of investors through to this market. We've had a lot of funds in the $100 to $200 million mark as well, which are really, really stimulating a new LP investor base. Whilst you may recognize a lot of these names and logos, they're familiar players in the space, and you would have heard of them, no doubt. But we've also been compiling data on as many impact funds as we possibly can over the last 2 years. Data is becoming an increasingly essential part of our business, as investors want to get a sense of the direction of travel of the market as a whole. Whilst aggregate data, so the GIN report, for instance, about the size and growth of the market are really helpful to build credentials in the area and to entice the mainstream, they are less helpful when investors are really looking at products, what they can actually tangibly invest in. So this is why on our data collection, we've been focusing on live investable opportunities, which LPs can actually diligence and invest in. We still have some more work to do on completing this data set for 2018, as the numbers are literally still coming in. But some high-level findings from the data we've collected so far. We're tracking data on 452 impact funds and products, which have raised capital from LP investors since 2010. 109 new funds and products were actively raising capital last year in the market. A breakdown of where these funds were actually investing geographically. So 51% were investing in developing markets, 16% global strategy, and 33% in developed markets. When it comes to investors, as I mentioned, we have 306 institutional LP investors who are interested and actively looking at impact fund products, of which 91 institutional LP investors committed capital to impact funds in 2018. This is a significant rise year on year for the last 5 years. In 2018 alone, we hosted over 100 meetings with 74 impact fund managers and investors. And this is our current source, and that's our primary source of where we're gathering our data from. It's face-to-face interactions alongside our own research. We are planning on collating this full data set and making it available in a report at some point over Q1 this year, and we'll be publishing a report fully later next year. In the meantime, we will have a report available for you today. This report has been written by my colleagues, and this is based really on the history of the impact investment space. What we see is driving the core growth, and what we see is the future of the impact investment market as well. As you can see from the title, after 15 years of hype, what has actually changed? This is a slightly different perspective on the successes and failures of the market. It's not meant to be a celebration or a cheerleading report, as many of you may have seen before or read about the sector, but intended rather to be a critical analysis of the space and really what needs to change and improve. This will be available to you, as I said, at the end of this, so you can take it away, and it's a fascinating bit of bedtime reading, no doubt. I can see Rod looking at his watch anxiously. He's as the timekeeper for today, so I'm going to wrap up and press on with our agenda for the day.